Hello, good afternoon, and welcome to HYCM's online trading workshop with myself, Giles Cochran, the Chief Currency Analyst here at HYCM. Just want to say hello to folks that are coming in. Hi, Aaron. Hi, Sammy. Hi, Toby, Van, Selva. Great to have you on board. Looking forward to this session. There's a lot of learning points from this session, which is great. So I'm really pleased that we've got a good session ahead on quite a few developments we've had in the market. Just as folks are coming in, I'll just go through the normal disclaimer. Don't forget, it's important to realize that what we're not doing during this workshop is we're not broadcasting trading signals. Although we will be talking about entries, exits, different currency pairs, the whole perspective is trying to understand what is driving the market, what is driving the currency pair, so then you can go away and make investing decisions for yourself. The whole idea is eventually you don't need someone like me, because I've been able to teach you guys how to identify which currencies are likely to find sellers or buyers and how to choose currency pairs. So that's the whole, heartbeat of this workshop, and that's my heartbeat too, is I want to be able to communicate with you guys so that you can approach the market in the way that a professional approaches the market, in order to recognize, high probability trading opportunities, and also avoid some unnecessary losses, which is relatively simple to do when you have some of this knowledge which you've been working at for a while. So good to have you guys on board. I know there was some problem with the email reminder system, so attendance has been a little bit lower recently. So apologies if you got caught up in that. Well, without further ado, let's move on to the session that we have ahead. I'm just gonna put in my workshop guide. Just apologies for this. I've got an old workshop guide and I just need to put the present workshop guide in. Yeah, that's great. Lovely. So as we start to look ahead, what we have for the session, the special topic, which I was just reminded that I hadn't put the correct workshop guide in, is how to draw trend lines to find entries on pullbacks. This can be a helpful little trick. You're thinking to yourself, I want to enter a currency pair. I've identified when I'm expecting it to move, but how far is it going to pull back? This is a little trick that can help you give that little bit of extra layer of confirmation when you want to enter a trade. We'll go through some examples. We may be looking through some examples today, which provide good opportunities to draw trend lines and to show you how to do that. So it's a little niche special topic today, but I know that some of you guys will appreciate this, and some of you guys will find this helpful as well, particularly for entering on pullbacks. Don't forget, we've got a question panel. Yeah, hi Aaron, hi Sammy, thank you guys. The question panel is for you to use. And remember, at the end of the session, we're looking at any trades that you guys are looking at. So any trades you guys are looking at, put it in the question and answer panel. And towards the end of the session, I'll go through it. So if you've got a question, I'm trading this currency pair, just let me know. We can go through it together, okay? And I can give you any sort of comments which I think about those currency pairs. Things to look out for, things that are good about it, etc., etc. So use the question panel. Don't be shy, and remember, don't fear asking stupid questions, because there aren't any stupid questions. We all have to learn. I had to learn. I guarantee you, if you're asking a stupid question, in your opinion, I've asked it first. And I've just kept out. The difference is I just kept asking the stupid questions until I got all the answers. And well, not to everything, but you know what I mean. The whole point is ask the questions, and I'll do my best to help you with them. The handout for the session is in the handout panel. Now, if you go to the little grey arrow, which is by the workshop, it says handouts 1 of 5. There's a workshop guide for September the 24th, today's date. Just click on that, and then you will see the workshop guide, how to use trend lines for entry points and pullbacks. Now, using, so just my chargers, that was just my charger, so that should be all okay for you again. Right, there we go. Okay, that should be okay. Let's see if I can move this around. Okay, this handout I've specially designed in order to be useful. Okay, so if you look at it, it says, look forward, look back. These 5 principles are things that I do intuitively each and every time. I look back at the charts, I'm looking forward for upcoming events, I'm looking at the charts, looking at my risk, I'm looking at the outcome on my trade. Keep doing these things. That is what I really highly recommend. And this one, page sheet, which I've designed, is meant to be just that one page that is helpful for you guys, so you can actually use it, okay? And you can actually refer to this as you're trading. And if you maybe have a losing trade, you can look back and think, well, hang on, did I follow this process? Or what did I do different? Maybe you got caught out by an upcoming market event. You think, oh, actually, hang on, if I just referred to this guide, it would have helped me. Okay, so that's the whole point of that that guide there. So print it out, use it. We're going to go through that now together. But if you print it out for yourself, then you can keep it by your desk. Any suggestions for topics? Email me here or put something in the question panel. It's better if you email me, because if you email me, it'll be an email record and I'll see it again. Whereas if you put it in the question and answer panel here, I might forget it by next week. So just pop it in an email. It's easier for me to address it that way. Okay, so first of all, remember the whole heartbeat of what we're trying to do. We're trying to find currency pairs which are going in opposite directions to each other. Okay, that's the heartbeat of what we're trying to identify. We're looking to pair a strong currency with a weak currency. That's what we're trying to do. Each and every time I come to the market, I'm thinking to myself, which currencies are strong, which currencies are weak, where do I technically want to enter? That's the kind of decision that I'm looking at. And once you embrace that foundation, you will find that you will start to be picking the market direction much, much, much more predictably. You'll start to see, oh, actually, hang on, that currency pair that I chose was bid. Those currencies did go the direction that I was expecting. Buyers did enter on pullback just as I thought they would. If you keep pairing these, principles, you will find that will keep working for you. So that's what we're going to do now. So in this workshop, I'm going to go through, an example of how to do that. And by following that, by seeing that example actually in play, you're gonna get an idea for yourself about how to do it. So that's what we're going to do. We're going to go and you turn to your handout, and your handout looks like this. And the first thing we want to do, of course, is we want to look back. Okay, and when we look back, we want to identify a recent sentiment by reading up on the last 2 sessions of market activity. Okay, so what you want to do, you want to come to read some kind of market wrap. Okay, now I'm going to show you a little tip to help you with this. Okay, now this little tip is here. Now this is the website, and I do some work for these guys, and they're very good because I know the back end of this chart uses a Bloomberg terminal, Reuters terminal, and I've got a RAND squawk going on at the same time. So in other words, I've got access to excellent data feeds. And on this website, forexlive.com, you see these, what's called a trading session wrap. Okay, this is a little tip for you. Just go to the trading session wrap, click on that there. When you click onto the trading session wrap, you'll see the wrap for the last session. Now, here's my wrap here, okay? Now, when you see this wrap, what you see is you see some of the key events, and then you read a summary here, okay? And what these summaries do is they kind of point out to you the key events that happened during that last session. So in this market wrap, for instance, you can see that there was some Australian dollar, Japanese yen buyers on some on this US soybean waiver announcement that happened. Okay. You also see that the UK Supreme Court rules prorogation was unlawful. See, I talk about there and how that affected the pound. Okay, and we also looked at a comment from Governor Lowe. So reading the session wraps will tune you into those very, very carefully. So if you then you can go to the Asian session one. Okay, see subdued day today. Having said that, you read the information, and by reading that information, you tune yourself in. Now, the benefit of this for you guys is it's free. You don't have to pay anything for it. Okay, and I know that the back end is very good because I do work for them. I know that their data feeds are reliable. So it's just a bit of inside, knowledge for you guys to help. So now we're going to go through that together. Okay, so we're going to look back. We start to look back at the Asian session. Now, first of all, we are always going to hone in on the equity markets. Now, if you don't have access to professional feeds, okay, you are going to want to make sure you've got some kind of inclination of what's happening with the equity markets. So you can see here that the Asian equity markets were gently bid. They were stroke mix, following an indecisive Wall Street lead on weak European PMIs. Right, this is the big story that's happening. Yesterday, there was a series of European PMIs out of Europe. We had the French reading, then we had the German reading, then we had the European reading. Okay, we covered that yesterday. Let me just show you that so you can see for yourself the story. Okay, now, just as I'm calling that chart up, the story with Europe is that the growth is slowing, and the concern is that manufacturing growth, in particular out of Germany, is going to start overflowing to the service sector. So what we saw German manufacturing down 41.4. Now that was like some of the lowest, that was the lowest reading since 2009, which is the global financial crisis. So that tells you how bad manufacturing PMI is out of Germany. We saw services PMIs falling 52.5, and we saw French PMIs down to 51.6, and manufacturing down 50.3. So we were down across the board, and then the European readings, obviously, because the French and the German data feeds into it. So that was very poor. So the last sort of 24, 40 hours, we've seen euro weakness, and that euro weakness has been on those poor data readings. Okay, so Wall Street was a bit indecisive because the concern was, if global growth is slowing down, then hang on, this is mean the US-China trade wars affecting Europe. This is a big concern. Equity markets were starting to reflect some of that risk. Okay, so then we had the Asian market meeting, and when the Asian market was meeting overnight, there were kind of mixed tones. Okay, and it was quite indecisive. So the Nikkei was up 0.0 rather 9%. We had the Hang Seng up 0.22%, the Shanghai Composite up 0.28%. So it was up, but marginally. Okay. So in other words, the market's saying, well, we're in a kind of indecisive tone. Okay. why do we care? Why do FX traders care about the equity markets? Now, I was thinking about this a little bit today, actually. And I was thinking, the thing that a lot of retail traders have to understand is that the equity markets really give you such a clear direction on risk that you really want to have one eye on them. Now, when you're trading using a Squawk or using a professional news service, what the commentators tend to do, the analysts tend to do, is they just tell you, what's happening. They say, oh, we're seeing some risk-on tones or risk-off tones going to the market. So essentially, you don't have to, you don't even have to really be aware of it. You don't have to look at the equity markets. But when you're coming from a retail perspective, and you probably don't have those resources, you've got to work it out for yourself. And it's important that you do, because if you keep an eye on this risk, it will help you, because you'll be able to look at a change in risk sentiment. Now, obviously, there are some news sites that keep it informed, and FX on forexlive.com obviously talk about risk. You've got to look through the feed, and you'll see that I was reminding people about risk during the session. But you don't want to be reliant on someone else. You want to be able to do it yourself. Okay, so why do FX traders care about the equity markets? It's very simply because of risk sentiment. We want to find what risk is doing. Because if the equity market is falling, that means we're in a risk-off environment. If the equity market is rising, that means we're in a risk-on environment. Equity markets are sensitive to risk, and they tend to move very, very acutely with risk. And that gives a lead to the FX sphere. So in the Asian session, because life is never perfect, is it? It's not like this. It's not like every time you come to the trading terminal, it's in a fully risk on mode or in a fully risk off mode. Sometimes you'll come to the terminal and okay, we started in the risk on mood, but then we're on risk off, or it was indecisive and then it went risk off before going risk on. The market is dynamic. That's why reading the equity markets is important for you. So in the Asian session, risk was neither on nor off at the start. It was just pretty flat. We saw a lower volatility index. This is a little cheat sheet for you. I know it can be quite daunting at first, particularly if you're just getting into this for yourself the first time. How do you get into analyzing these kind of moves? Well, here's a little cheat sheet for you. So, if you see a lower volatility index, that's known as the VIX. If you see stocks rallying, commodities rising, bond prices falling, and bond yields rising, remember that the price of bonds and the yields of bonds move in different directions to each other. If you see risk on and FX trades, then you will, that's when you'll see risk on and FX trades in this environment. When it's this environment, you see risk off. I'm not going to go through it, it's self-explanatory, you can look at it for yourself. So risk off markets that depreciate. So if we're risk off, we see yen and Swiss franc strength. Okay, I'm just going to put strength, that's a little bit clearer. And in a very risk-off environment, we're likely to see US dollar strength as well. So if there's a real big concerns about that, we'll see US dollar strength. Australian and New Zealand dollar and the Canadian dollar tend to depreciate, the commodity currencies, okay? Particularly Australian dollar and New Zealand dollar, we see depreciation. CAD is very linked up with oil, but in a risk-off market, we tend to see oil prices fall as well. Use the Nikkei, I find, is a good gauge going to the start of the European session, to see what the Nikkei was doing overnight. Risk on markets that appreciate during risk on times. This is when you get higher yielding currencies like Australian dollar, New Zealand dollar, and Canadian dollar strength. And we see yen and Swiss franc being sold off. So that's something to look at. So looking at the equity markets now, here's a quick snapshot. Okay, just typing in the question panel, what do you think here if you looked at these equity markets? So this is the European equity markets. Here we've got the UK FTSE 100 down to the Italian FTSE, these down to the FX indices. So it's the FTSE down to the ATHEX, that's the European. Then we've got the Asian from here down to S&P ASX, and it's US from the top down. So what would you say, looking at those equity markets, what kind of mood are we in, would you say, looking at that? If you had to look at that. Yeah, that's it. We're on a mild risk on sentiment, and that's, you can see that those equity markets are mildly supportive, and just about to get to the US Open in about 10 minutes. So we'll see the S&P 500 opening. The futures were up 0.33% here. So, okay, it's looking like a risk on kind of mode. Efan, that's what I would say it was, and that's what the market has been during the last during the session. Okay, so the big news in the Asian session was that China gave a new waiver to tariff-free US soybean purchases. A big focus of the market has been agricultural and trade news between US and China. We know that. If you've been following this webinar, we've been following that over and over again. And this was an announcement that there's been this mood of optimism between the US and China. And so China was sort of playing along with that mood and saying, okay, we're going to give a waiver to some tariffs for US soybean purchases. So we're going to say that the tariffs don't apply, okay? So that was a very good news for the US-China trade war, which means that was good for risk on sentiment, okay? And one of the best currency pairs for risk on sentiment is the Australian dollar, Japanese yen. Now, the reason this is so good for risk on sentiment is the Australian dollar is often traded as a proxy for the Chinese yuan. So in other words, what's good for China is good for the Australian dollar. What's bad for China is bad for the Australian dollar. So if there's good news for China, US-China trade relationships, that's going to be good news for the Australian dollar, okay? So what we saw the Australian dollar spike higher. You can't see it very easily on this chart. Well, let me just pull up the chart here. Right, what we saw this spike higher earlier in the session. It was from here to here. Okay, this is when we saw this spike. And that was the spike higher from there to there. We saw price spiked up to 73 on the news and then pulled back and then subsequently has moved higher. Now, what I was looking for this morning was I was looking for a play which I popped on our Telegram channel. I was looking for, it was this chart that I took at the time. Okay, so this is where price was. I was looking for longs to target up to 73.20, stops underneath, just looking for a simple play up to there, simply sort of 20 plus points on the Australian Japanese yen. Okay, now that was because as we was looking at the Australian dollar Japanese yen, that was because we'd done our analysis and it was obvious to me that the Australian dollar was going to be the strong currency and the Japanese yen was going to be weak because the market was going to be put into a risk on mood with this good news between US and China. So we knew we were going to see yen weakness and Australian dollar strength. So we're expecting to see weak Japanese yen, strong Australian dollar. And that's what we saw. And I took this screenshot around, I can't remember what time this was, but we saw, okay, the Australian dollar was strong and the Japanese yen was weak. And there were times when it was the weakest currency. This is just a snapshot I took at the time during the session. And so that was good confirmation that the Australian dollar Japanese yen pair looks good for longs. And so that was a trade. And then subsequently, price moved into that 73.20 level, and longs people who were long from here were taking target. That was an obvious target. Look, you got the support turns resistance, got the 100 exponential moving average, the 200 exponential moving average above. So a very straight, obvious target would be here, which is where you'd expect profit takers to be. But that was, and that was flagged on our Telegram channel. So here was, so this was, so here's the post that was made here at 9:20 British Summer Time. That was the original post, and annoyingly, my my audio didn't upload to the site. Sometimes the site annoys me and it doesn't upload the content I put on, particularly if it's a video or a audio file, frustratingly. But the trade record, the point I'm trying to get to was to say, look, that was a very obvious weak, strong currency pair, okay? And, we're expecting buyers at market, and that all played out into now, that wasn't necessary, if you're just learning trading or just getting into trading, that's not the most obvious sentiment shift, but it was good. It was good enough. It was good enough for me for the day. Okay, and then further on in the European session, we had the Bank of Australia RBA low on the wires. Now, he said a number of things about the Australian economy, but the thing that really stood out was where he said here. He said the Australian economy is reaching a gentle turning point. And the market really focused on that phrase, gentle turning point. And the reason they focus on that is that he's used that phrase before. And when he uses that phrase, what he's really saying is that the chances of a rate cut that you guys are sort of pricing in, he's saying, well, I'm not so sure about a rate cut. It's certainly not a done deal. Now, what happened with the Reserve Bank of Australia is there was some very weak employment data out early in the month. And that weak employment data meant the market was pricing an Australian dollar rate cut at the next rate meeting. But when the governor is saying, we think that the economy may have reached a gentle turning point, and he's used that language before to say that rates are going to be on hold. So it's kind of like a code. It's like a code for saying, rates are on hold for now. Slow down, hold your horses. And so the Australian dollar rose on those comments. The economy has reached a gentle turning point. So this was the spike we saw in the Australian US dollar, okay, on those comments. And, price moved up towards the 100, 200 exponential moving average and has since shrunk back. But that's just an interesting something to note, okay? We should note the Australian, the Reserve Bank of Australia may not be heading towards a rate cut like the market was expecting. So I had been, quite bearish on the Australian dollar, and that has now negated that view. One of the things you have to be aware and ready to do is to adapt. You have to be able to change as the information changes. And so prior to Governor Lowe speaking, I was thinking a rate cut in October makes sense. I no longer think that the Reserve Bank of Australia necessarily heading that way. Obviously, that can change as we go on. But that's why we saw this sudden spike in the Australian dollar. You can see the Australian dollar pair moved very quickly forward on that news, okay? And that was the reason for that spike. So look for any, that isn't really tradable, okay? I don't think it's a tradable sentiment shift. I'm expecting buyers on pullbacks for the Australian dollar, but I'm just checking that everything's okay. I'm just checking everything's okay with my. Can you guys hear me okay? I'm just, oh, that's good. Okay, no, it's fine. One of my colleagues just contacting me, and I have had my colleagues contact me sometimes when like the microphone isn't on or I'm not showing my screen. but I think I'm doing okay. I think you guys will let me know. So, okay, phew, that's great. Okay, look, so not really tradable, but I am expecting buyers on Australian dollar pullbacks for the next sort of, 24 hours. As I said, I'm not trading it, but that's the reason for the spike. Now, in the European session, we had the UK Supreme Court ruling on prorogation that Boris Johnson's prorogation of UK Parliament was deemed to be unlawful. Now, on this news, the pound spiked. I was reporting this live at the time, and the pound spiked before the news because of the way that the ruling was announced on the Reuters terminal. The language of the judges was so, quite clear in hindsight that the prorogation was unlawful. So you saw pound being bought up into that event, and once price was moved up and then moved down on the announcement, and the pound has sort of rallied since. Now, the difficult thing with trading Brexit headlines at the moment is they're so complicated. There's so many different outcomes and there's so many different changes that can occur. But the big picture is still, when is there going to be an election? Is an election going to be called? And is there going to be a deal? So if there's signs of a deal between UK and EU, expect buyers to enter in quickly for the pound. The closer we get to the 31st of October and a no-deal Brexit, and the more chances a no-deal Brexit looks likely, we're going to see pound sellers. Now, did what happened today fundamentally change the landscape? And the answer is no. This hasn't fundamentally changed the landscape. The pound is just being gently bid on the assumption that Parliament being forced to meet again, which is the situation that has to happen now, means that a no-deal Brexit is less likely. So it's a gentle sentiment shift. Okay, so we're seeing pound buyers not necessarily expecting that to continue. Now it might, but it's difficult to call. So it's not really an obviously tradable sentiment. I think one trade that would have been possible going into this is that it was expected that UK Parliament, that the UK Supreme Court would find against Boris Johnson. So we saw that into the news announcement, we saw the pound being bought. So I think that was the trade. And now I'm just sitting back and watching to see what happens. Boris Johnson has since been on the wire saying he's not going to resign. So he's still in place. The Labour government might call a vote of no confidence on Boris Johnson. There's a number of different factors. I've even heard different views that perhaps Boris Johnson will have a second attempt at proroguing Parliament. That's what's making Brexit headlines quite difficult to really trade very easily, is the amount of variation in different headlines. But the key ones to look for is going to be a deal between the UK and the EU? Signs of a deal between the UK and EU will find pound buyers. No deal, pound sellers. So keep that big picture, because eventually there should be a big sentiment shift in the pound that should be very tradable, because it'll be so clear. Okay, so keep waiting for that clear move. So sentiment for the US session. So going into this US session, again, I'm expecting to see strong Australian dollar and weak Japanese yen. I'm expecting this mood to carry on. This is exactly what I thought about this morning. I think it's the same now. So looking at the Australian dollar Japanese yen pair, let's have a look and to see where technically to enter now. So here we are. We've got this spike forward. We've got the 15-minute chart. So let's put our Fibonacci retracement on. So this is the 24th. Let's go back to the previous day's price action. Okay, so here's the previous day, 23rd. So there we go. So looking there, where might we expect to see some buy. We can see, look, price is finding resistance up there at the 100 exponential moving average. Remember, that's where we saw buyers from the European session. That's where we thought they take their profit. And you can see, look, that's where they've taken their profit. 73.20. It spiked a little bit above, the 10 pips, but that was the target. Now, looking at the chart now, where would be a sensible place for buyers to regain? Now, what we want to look at, very simply, look at areas of confluence. So where is a good place to enter? Now, we've got some sort of, that is old resistance here. So we expect to find some support at, I've got the big round number, 73, 50% Fibonacci. Let's see if we've got any pivot points in this area. Let's have a look on the higher time frames, see if we've got any pivots. Nothing. Let's have a look on the 15-minute. 73.04. Yeah, okay. So looking at all those different places, we can see that we're expecting buyers in this region, in this region here. So from around 73.04 to 72.97, that's where we'll be expecting buyers, and then we'll be looking at taking profit again up at these highs here, so about 73.20 region. So that's where I would expect to find buyers here. Now, the risk to this trade is we get some negative global risk news. So if we get some negative global risk news, I would expect the Australian dollar to fall, because the Australian dollar would go weak and the Japanese yen would go strong. So this is reliant on sentiment staying the same. So as long as sentiment stays supported, then we'll look at any retracement down here is a potential buying opportunity back up to these highs. So that's where I'd expect buyers from here. Where I'd expect stops? I'd expect stops below the lows here, or maybe below this, this region here. Avoid putting your stops in the most obvious place. The obvious place to put your stops would be like here or here. And that's the sort of place we get a liquidity hunt. You might get a run on stops down there. And the better place is to have your stops just here or even here, just nice and out of the way. So if anyone comes down hunting for stops, because that's what large funds have to do. They don't have the option to necessarily always fill their orders, so they have to go looking for orders. That's the philosophy behind a liquidity hunt. So don't just be taken out for no reason. So again, this region here, so 73.05 to 72.97, that would seem a logical place for buyers to enter the market. Okay. Looking forward now, we do have a very interesting decision coming up. And this is the RBNZ rate decision. Let me just pull up the time for this. This is happening at 3 a.m. GMT early tomorrow morning. Okay. Now, the RBNZ cut rates aggressively in August with a 50 basis points rate cut. It was a surprise rate cut decision, and sellers entered the market immediately, as you'd expect. The RBNZ is in a wait and see mode, but Governor Orr has said that negative interest rates was easily within the realms of possibility. So in other words, Governor Orr is open to lower interest rates. So there's no rate cuts expected, but some investment banks are predicting a 25 basis points November rate cut. So this is the most important scheduled event of the week. So this is an event that if you can be around for, you want to be around for it. Now this is hard for me. My time. This is 3 a.m. in the middle of the night, and I've been getting up at 4:30 a.m. To cover the European session with FX Live. So that's a very difficult time for me. So I'm not sure if I'm going to push for it, but if you can make that meeting, that is one to get to. Now, here's like the playbook. If they cut rates, you can expect immediate New Zealand dollar sellers, okay? If they announce coming cut rates, so if they say something like we're keeping rates on hold, but we're anticipating a rate cut further, next month, again, expect New Zealand dollar sellers. If it's an unexpected rate cut, just expect immediate New Zealand dollar sellers, and that's the kind of trade that sellers enter immediately into, okay? Because they know that there's going to be some follow through, some downside. So if you get a dovish reaction or a rate cut or announcing rate cuts, expect New Zealand Japanese yen or New Zealand Swiss franc downside. Now, the yen is quite a decent pair to pair it with because, if any risk off sentiment comes in the market, that just helps you on your way. So that's one to look at. The other one to look at is Australian New Zealand dollar, because depending on the spread that you guys get, the Australian dollar is obviously being slightly supported by RBA saying that there's a gentle turning point for the RBA. And if the New Zealand dollar RBNZ cut rates, you've got a central bank divergence. So you've got an Australian dollar, New Zealand dollar long. So that's one to look at for. Hawkish sentiment move. So if they say, actually, we're done with rate cuts, we're quite happy to remain as we are, then expect immediate New Zealand dollar buyers. And if you get this hawkish shift, I would expect a new Euro New Zealand dollar sellers make sense, okay? Because the euro is weak on those PMI data, so any New Zealand dollar strength will be played well with the euro. That's where you expect sellers to enter immediately. So that's worth taking a screenshot of that. If it's dovish, New Zealand dollar Japanese yen downside, hawkish, euro New Zealand dollar sellers. If it stays the same, if they kind of just say, we're still in wait and see mode, we don't know what we're doing, we could be up, we could be down. If it's that, then there's no trade, there's no sentiment shift. One of the key things in getting a decent trade is you want to have the sentiment shift. You need to have something unexpected to move the currencies, and that gives you the conviction that the trade will be moving in your direction. Now, I wanted to spend some time looking at what's driving currencies at the moment. We may get time for that, but I also want to make sure we've got time for a few other things. So I will return to this if we need to, have time to. I want to look at here quickly, what trades are any of you guys looking at? So just pop in the question panel. Are there any trades you're looking at? Anything you want me to have a look for? We can talk it through together. It's not a bad just give folks a moment that if you just pop it in the question panel. Okay. Okay, everyone good. There's no one's putting any questions in, so if a question comes up, we can return to it. Otherwise, we'll leave that for now and we'll go on to our special topic. And the special topic is using trend lines as entries on pullbacks. Now let's use the Australian dollar Japanese yen pair as an opportunity for learning. So let's take it. Here we go. So here's the Australian Japanese yen pair. Right. Okay. Right. Here we go. Right. So we'll go down to the 5-minute chart. So here we go. Here was the spike on the news that China had suspended some soybean tariffs in some regions of China. Positive risk on sentiment. And let's say, for the sake of argument, that you thought, well, you know, that's very good for risk. I'm expecting Australian dollar, Japanese yen longs, and I want to enter on a pullback. Okay, and maybe you drew your fib level in, and you think, well, you know, which fib level do I use? A general go-to is the 50%. Okay, so say you entered at the 50%, you would have put your stops, you know, somewhere out of the way down here, somewhere where you know you're absolutely wrong, and you would have targeted at the recent highs, or as I was targeting the 73.20 region. Okay, that was where it made sense. And so you thought, well, you know, I'm not sure. I want confirmation, you know, before I enter. So this is how you'd use a trend line. So you'd have the trend line there, and just draw your trend line through your relevant highs. Okay, a bit harder here. We've got 1, 2 points. Ideally, you want 3 points of contact, but that'll do. Okay, so you would have thought, okay, draw my trend line there, and once you saw the break and close above the trend line, then you can say that could have been the confirmation for you to enter long. Okay, so it's a bit harder to do it on a 15-minute chart. Let's look at the pound US dollar, and let's use exactly the same principle. Go down to the 5-minute chart. Okay, so say you're thinking, okay, well, you know, I saw that spike on the Brexit headlines, and I wanted to, you know, I think sentiment's going to carry on. Again, drew a trend line across down here, 1, 2 touches there, and you could use the breakout there at the 38, pop your stop well out of the way down, you know, down below here, targeting recent highs would have made sense. The other way is just to enter on the 50% retracement level, but the benefit of the trend line is once you've got the trend line broken, you've got a bit of confirmation that it's going back in your direction. Let's look at another example. Let's look at the Euro US dollar on those very weak PMIs. Okay, so we saw some right. So this was the weak PMI data out yesterday. We saw price went through 1.10, broke through the descending trend line. Let's get rid of that. It's no longer valid. Anyway, I thought, okay, well then, you know, when do I enter short here? Okay, now what you would have done, you would have put your trend line in here, 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 here. And on the break of the trend line there, that would have been a signal to enter short, stop above the high. Now, this sentiment is starting to get old. You know, remember, sentiment is best traded fresh. Okay, so what you want sentiment, and it lasts for like 1 day or 2 days, or 24, 48 hours. So let's say, for the sake of argument, that on this weak PMI data, let's say you'd entered short here. Okay, so say you've waited here, you know, you came to your desk either here, or you see, okay, my trend line's broken, I entered short, stop above the high. Now the thing, say you're still short, the thing to do with this trade now is once it gets to the end of today, you want to just close that trade out. Okay, now the place to target is recent lows down at this 1.0975 level. So you can see there's not much in that trade. You know, 9.5 to 7, you know, to 7.0. There's around 20, 25 points potential profit. But when you start leaving sentiment, this was yesterday. So by the end of the day, that negative sentiment's gone. The market wants fresh sentiment. So you can see when that happened, yeah, the sentiment was very negative for the euro. But as soon as that sentiment passed, so after today, it's gone. So if you haven't, wherever that is today at the end of the session, you would just want to close your trade out and just move on to the next trade, profit or loss. Just don't hold it, because the longer you hold it, then you got chance. You're much more likely to get your stop hit up here. You can see price rallying up. It could be heading on the way to a new high. You can see that trend line is broken and held there. So you see you got hold break. So it starts to get foggy after today for sentiment for the euro. Let's just see if yeah, okay, got a question here from Hyder. Yeah, said, how do you trade day-to-day sentiment shifts? Like we had a weak euro versus strong Japanese yen yesterday, and a strong Australian dollar versus weak Japanese yen today. Do you look at opening a position in the European session and close it before New York session ends? Yeah, what I'm looking for, Hyder, is I'm either looking for a sentiment, if there's a sentiment shift, that means the reason for those strong or weak currencies are invalid, I will pull the trade, whether I'm in the trade or not. I just remove the position. Otherwise, like today, I was trying to get that first target 73.20. The profit target was reached. Okay, and that's it. Just close the profit. And then I was thinking, you could still do Australian dollar, Japanese yen longs again, but I'll be looking for more of a pullback before I was really interested. So generally speaking, I'm just going to plug my computer in. Generally speaking, you want to be closing the position out by the end of the New York session, or sometimes I might give them, 18 hours. I might come back tomorrow morning and see how it's going. Okay, particularly if it's on a deep pullback. So some of it depends on where I'm entering. If you're entering a deep pullback, I'll be inclined to give it a bit more time. But if it's, I'm entering the 50% region or something like that, if I haven't hit my profit target, then I certainly won't be holding that too long. So it depends on how strong the sentiment is. So Hyder, with that euro session, with that euro trade, euro US dollar, with the euro PMIs, that was a strong sentiment shift. So that was worth 24, 48 hours worth of waiting, because it was strong. The Australian dollar, Japanese yen long hours today, that's not such a strong sentiment shift. And I think particularly when you're learning, and really when you're trying to find your trading, just get into the groove, as it were, wait for the strong and obvious sentiment shifts. Like all the sentiment shifts we've looked at today, they're little mini shifts, but are they really strong? No. So the soybeans is a relatively minor bit of good news on risk on sentiment. The prorogation of Parliament deemed unlawful was not completely unexpected, because the Supreme Court's decision was expected, and B, it doesn't fundamentally change things with Brexit. RBA governor's low. The chances of a rate cut are now down to 60% from around 80%. So, okay, so all those sentiment shifts are there. They are sentiment shifts. And, we have seen a reaction in each of them. But would I say that's really strong? No. So could you have passed on those trades? Yes, you could. And you could have looked at waiting for a more tradable and obvious sentiment shift. So particularly if you're getting into this at the first, wait for the really, really obvious shifts. Now, the obvious potential shift that we've got coming is the RBNZ rate statement. Okay, so if you've missed everything up till now, or you haven't got in a trade and you're hungry to trade, sometimes you just got to resist that urge to trade. You've got to resist it. Okay. Now the RBNZ rate decision, that is potentially a very good trade. Now that one, if they do cut rates like they did in August, we're going to see New Zealand dollar sellers enter the market immediately. And that would be a good opportunity for New Zealand dollar sellers. And New Zealand dollar sellers will just jump straight into that if there is a rate cut, and they will take profit at relevant lows. So that is the one to watch. But say you miss it. Okay, let's say let's pull up a chart and let me give you an example, because this is the kind of thing I'll show you from the last example. Right, let's just. Right, we'll go back to the last rate decision, okay, from the RBNZ. Now, it was in August. There we go. No, actually, where was the? This was it. This was it. Okay, so let's see. Okay, so let's say you missed the rate decision, Hyder, and this was it. This was the move. Now, I was up at the time. I traded this, and I took profit somewhere down here. Okay, I traded up, around here, took profit down there. I was leveraged. Those of you who've been to my seminar in Dubai know that I advocate trading without leverage, except in extreme situations. This was an extreme situation, a 50 basis points rate cut. Very sure that price was heading in my direction, so I used some leverage, and I took profit down here. Now, let's imagine, Hyder, that you came back to your desk. You came to your desk, and price was around here, and you thought, I've missed it. I've missed the interest rate decision. Well, then don't worry. A very simple technique is this. Okay, just draw a Fibonacci retracement. Okay, from the recent highs down to the lows here. Okay, and then trade the 50% retracement level. You can see, look, this was an obvious level because support, breaks, resistance, 50% level, and just trade it simply down to these lows. And you can see that was, if you'd entered, you would have had here 68.81, and you're looking at about 90 points profit. Don't take profit down here. Okay, don't be looking at taking profit at these. Look, just enter here at this shoulder level here, around this kind of take profit here. Okay, so we're starting to see the body of candles to take profit. Look, and it's a big round number. So I would have taken, 68.03, something like that would be a decent place to take profit. And then so you would have had 80 points of profit. If you want to use that technique with the trend line that I showed you, if you did it on this one, simply go, you could have used it there and entered short from here. Or if you wanted to stretch it out, you could have, say you missed that one, you could have entered here. Okay, either places would have been okay. Either would have worked just fine. So that's that. Now, the last thing I want to share with you guys is we've got a new landing page for, and now where is it? Hang on. Yeah, here it is now. we've got a new landing page. I'll just send it to you. I'm going to send you this page because you're going to get an email about this afterwards. Now, this is a landing page that HYCM created for me. And what it does, it's a way of setting up private coaching with me on a one-to-one basis, okay? So the benefit of one-to-one coaching is that I can speak to you personally. You know, one of the weaknesses of the webinar, the good thing is I can give a lot of information out, but sometimes I don't get that feedback necessarily knowing how you're doing. The benefit of one-to-one coaching is you can tell me, you know, any issues you've got, and we can look at that. Now, you can read, you know, some of the blurb, but if you wanted to have a session, these are the deposits you put into your account. Now, it's important you realize this is not money that you pay for the one-on-one session. This is money you deposit into your account. So in other words, if you deposit that amount of money, $1,500, that's your money, but you also qualify for a 1-hour coaching session. Similarly, in the Pro, you also qualify for 1-hour coaching session plus 1-hour trading follow-up. Okay. So if you wanted to say you're about to deposit some money in your account, you know, then look, use this offer, because at the very least, we can go through some different scenarios with yourself and work out, you know, a plan of action, or you can have a chat with me. I tailor it to the individual. And if you wanted to, you know, go for it, you just click on it, fill in the form, choose the method, and one of the account managers will get hold of you. This guy here, Sheho, he's a great guy, really helpful. He's one of my colleagues. And if you have any problems with the form, just like contact him, and he will help you. And there's just some you know, what people have said who've had some you know, more personal connection with me, and you're getting some guidance is really helpful. Like, this is kind of, I wish I'd been able to meet myself 10 years ago. You know, if I'd met myself 10 years ago when I first started FX, it would have saved me so much difficulty. You know, so do have a look at this. It would be great to be in touch. That is, guys, that is all. It's been a very busy day for me today, so I'm looking forward to a bit of R&R. I hope you guys are okay, and don't forget, we'll have the FX week ahead next Monday, and also we've got the RBNZ rate decision, so don't miss that. And remember, if you do miss the decision and can't get up, then don't forget, if there isn't a surprise rate cut, don't forget to expect sellers entering on a 50% retracement. Guys, I hope that you're good, and I hope that you are well, and I look forward to seeing some of you guys next Monday. Take care now, guys. Goodbye. You're welcome, Aaron. Take care now. Bye.